Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
Good
Hey.
morning.
Good morning, Bruce. Good morning.
Yep, was a crazy weekend. Got a lot of new business came in over the weekend. I know you had a lot of things going on, so there's a lot of activity in the market. It's been crazy with after the rate hike from the Fed as to what's gone on in the market. So I think it warrants some conversation on that.
Yeah, for sure. And I went, as you know, I went to a wedding this weekend up in Charleston, South Carolina, and got a lead for somebody who wants to move down here from up there. So that was great. But listening to talking to a couple of people about the market up there, apparently, I mean, I know it's everywhere that the market is up dramatically, but those people are complaining about house prices being too high. So
Sure, everybody is. It's not a problem that we're just dealing with in Central Florida. It's a nationwide problem.
For sure. But I don't think house prices are going to come down. So,
Well, it's only a problem if you don't own real estate. If you own real estate, it's not a problem that home prices are going up, right?
true.
I think the problem more so, Tom, is the perception that people have about home values. Because if you ask people what their primary concerns are, it's rising interest rates and rising home prices. And that those are the issues that people are dealing with right now. I mean,
Well,
those
and
are
I
those are
think
the
they look at
everyday
that.
concerns.
I think they look at that compared to rising wages, which aren't rising as fast as
It's
those
going to
other.
take some time to catch up with the way inflation has really affected
Yeah,
our standard of living, I would say.
absolutely. Inflation is killing us all for
Yep.
sure.
Hey, so listen, I put together a chart for us to review today from a
Yeah.
class that I taught last Thursday to a group of real estate agents that really to understand what their clients are thinking about. And you and I talk about this on this show every Monday. What is going on in the minds of the consumer? Because that's what's real for us.
Yeah.
Whether their beliefs are legitimate or not, it's real for them. It's their reality. So we have to deal with that one way or another. So I I have really studied the cost of waiting.
Yeah.
And I'm going to show you some numbers that I worked out that would lead you in either direction. So if you're
Okay.
watching this and you think that this is going to be a sales pitch on buy now and wait or wait now and buy later, you're going to be surprised by this. So let's really just drill it down so we know what the real numbers are going to look like. You
Yeah,
want
let's
to?
do it.
All right. So have you got that up on the screen?
I
So
do. Yeah.
first things first, we have what we've got here is the common objections that people have. Rates are too high, home prices are too much, I don't have enough money, and I can't find a house in the market. So these are the real issues that are going on right now.
Hey, we
So
can help solve two of them pretty quick, right?
pretty easily.
I don't have
So
enough money. We have down payment assistance
we
programs
have
available.
we have down payment assistance right now,
And
and we
I'm
will
good at
find
finding
you a home.
houses. And I'm good at finding houses.
You're good
So
at finding houses. What we can't control is what interest rates are doing, and we can't control the price of houses.
right.
They are going to continue to go up, and I believe that interest rates are going to continue to go up. So let's just look at a scenario. So even though rates aren't quite 7.5 for everybody, if you have lower credit scores, you're going to be 7.5. Your average rate right now is about 7.1 to 7.2%. But let's just look at worst case scenario and assume that rates are going to rise and continue to rise. So let's say you got a 7.5% rate on a 350 house. Your payment, including taxes, insurance, mortgage insurance, everything is $3,228. And that's what's scaring people right now is that payment. Now, I don't know what your rent would be on a 375 house, but I'm going to guess it's 2,800 to 3,200. I own
I would
multiple
say
rental properties. I've got some that are in that price point, and that's about what I'm getting. High twos, low threes
100%.
for that price. So that's what we're looking at right there. But if we said, okay, Well, why don't we look at what it would cost to refinance that home and how much would we save if I bought it now and could afford the payment? How much would my payment drop if rates drop to 5.25? I think that's going to happen. And don't let mortgage lenders fool you on this. A lot of people I'm hearing out there telling their customers that rates are going to drop in the next 6 months, 10 months. It's not going to happen. Rates aren't going to start coming down till mid-year next year, and we're not going to see anything really attractive in the low fives, high fours to the end of 2024, the early 2025. That's about when we can expect it. But if rates do drop to 5.25, which I'm assuming they will, your payment's going to drop pretty significantly, and that's going to save you about $534. So some people may say, well, why don't I just wait? So let's just look at what it would cost to wait or what it would save you. So let's just take where we are today again, take that snapshot, and let's assume that home prices only go up by 2% per year. Okay. Just 2%. We're pretty much on target for that right now. And that's low.
Mhm.
That will change after 2025. You're going to start seeing massive appreciation. But until then, I don't expect a whole lot. So maybe we just wait it out. If you did, you would miss out on about $15,000 worth of appreciation. However, your payment's significantly less. So maybe if your payment is less, waiting, even though the house would be $15,000 more, if you waited, you're really saving about $447 by waiting, even with the price being higher. So it looks like, well, maybe I should sit on the sidelines. I don't like that payment. Why don't I sit on the sidelines? So let's put it in perspective, because that's a short snapshot and it doesn't give us the whole picture. So you got to live somewhere. So let's be conservative on your rent. Let's just say you can rent. Now, you can't rent a 375 house generally for 2,200. You might in some places, but not very many.
No.
So if you paid $2,200 a month for the next 24 months, you gave the landlord $52,800. That money is gone. You also missed out on $15,000 worth of equity. You're missed out on $7,000 worth of principal reduction. Your
So
total,
let's cover principal reduction real quick just to make sure. That's the amortization, right? That's the principal portion of our payment that is lowering the amount that we owe, right?
that is correct. So you
Okay.
spent $7,000 reducing your principal amount. So that's money that you've now gained an additional equity in your property. And this is assuming that the house only went up by $2,000, but you reduced your principal with regular payments. So there's your appreciation, there's your principal reduction, there's your total. Now, listen, I got to be fair, because when we looked at waiting, it was a $447 a month payment benefit. Over 24 months, that's $10,700. So let's take that into consideration and subtract that from it, because it's real. So even if we did that, you missed out on $64,189, which is $2,600 a month. Now, let's this be the devil's advocate, and let's say that housing prices don't go up at all. They're zero. Well, subtract 15 grand from that, you still have $49,000 and
Right.
change, which is over $2,000 a month that you're putting in your pocket by gaining equity in the property and appreciation in the property. Even if it doesn't appreciate at all, you're still ahead of the game by $49,000, even if this doesn't happen.
Yeah.
So I think that that is pretty close to where we need to be. Now, right now, here's where we are. Look at this
Oh,
chart.
let me
This
pull that
chart
back up.
tells us that we are not high in interest rates. There's your chart from 1971 right there. Look at these. We don't want to go into that territory. We're popping off of this ceiling of resistance right here, but we pierce that. We could be going into some higher rates. There's no question about it.
Yeah, I think I don't know if I look at this chart, it looks like it might have happened before. I'm not exactly sure what year that is, but um, maybe
Well, I
back in
can
like
tell
the
you what
early.
years they are. What
Well,
years?
in the 1980s, it looks like we had. So see how fast it went up.
Well,
That's I mean,
this was Carter. This was Reagan, Carter, Reagan. Okay. And it started coming down and it
Right.
kept coming down. And these shaded areas are your recessions.
Yep. Yep. Absolutely. Yeah. Yeah. And and I bought my first house. I was around 10% as well. So,
So the cost of waiting is expensive. There's no such thing as a rich renter. If you're renting, Hometown Heroes is running out of money right now. They'll be out of money by the end of August, early September at best. So if you're considering down payment assistance, buy now. I want to do one for next week on the cost of waiting if you own a home currently and are sitting on the sidelines waiting for prices to either drop, stabilize, or interest rates to go down. So we can do a cost of waiting for a move up buyer versus a
sure.
first time home buyer as well.
Sure. Another thing I'd like to talk about in the future here is adjustable rates, and if they, because I know they're usually a little bit lower. I personally am afraid of adjustable rates based on what happened in the 2000s,
Yep,
right, leading up to the crash. But I understand that they do have their place. So
they do.
um,
They
so you know,
absolutely have. I'm not afraid of adjustable rates at all. I don't think we're in an adjustable rate market. I think when we hit 9.5, you're going to
okay,
start seeing arms again. So I
fair
don't
enough.
think 7.5 is going to be an arm. And I will tell you, people that get talked into it are usually people that are talked into it by their bank. Banks love arms because they know you're coming back. Listen, everybody's going to refi anyway. So let's just get something solid, because if rates don't come down in 2 years and they don't come down for 5 years and that adjustable rate starts ticking up, you could be in a world of hurt.
You could be, and that's my concern, right? I say I'm afraid. I just, I like to have a known. I'm a risk taker, but not like that.
Well, I don't want to. I saw too many people lose their equity and their savings by adjustable rates. There is a time and a place. I'm not going to look at adjustable rates till we're much higher rates than we are today. Hopefully, we don't get there.
Hopefully, we don't get there.
Right?
Hey, listen, man, we ran a little bit over today. It was great information, though, man. I appreciate it, and I'll be looking to talk to you next week, Monday.
Yep, you got it, man. Have a good day.
All right, thanks. You too.